course, I think investors want to know about their growth story, what India is really planning. Also, I think there are general interests as to people like the structural changes India is really doing. There is a long-term sight clearly visible. And what people are really looking for is what is the thinking that is going behind it. And that's been very well explained, which also gives a lot of comfort to people as you go along.
So even as we debate when we will see the Fed rate hike, we don't have to worry about capital outflows when it comes to India?
So that, I think, is not typical only to India. It's to the bunch of whole emerging markets. So I don't think India can duck the trend if there are changes in the Fed hike. But we would be probably, and not probably, I'm sure that we'll be better placed than many of the other currencies because we are not a fully open economy. We have a lot of growth internally. Exports, of course, is a concern. And that is where something which people are focused on really solving.
You know, right now, globally, you're seeing the stock markets in a massive bull run at the moment. India perhaps riding the tide as well. But, you know, seeing the economic fundamentals, the macros that come out, do they justify what we're seeing on the Lal Street?
So I think basically it's liquidity chasing all the stocks across globally. But if you really see, then as per what our research also maintains, that, you know, if you really look at the December quarter and the March quarter, the base impact itself on growth will be much higher. So you cannot say that we are worse off than the others. I think most economies are actually going through excess liquidity. And we are part of that.
So then we should prepare ourselves and brace ourselves for a massive sell-off.
I would say it would be in line with the global markets. I don't think we need to brace for a sell-off. I do feel that the structural changes which are happening in India will help us stand out actually when the crowd goes lower. So even if we go lower with the rest of the world, I don't think we'll go as low as many of the other markets.
Because we are seeing the global economy pick up, there is a moderate acceleration there when you talk of the growth
Plus
figure.
the 2 quarters are going to be very good, right? I mean, they'll be better than your March and the September quarters.
So I wanted to talk about one of the structural reforms, GST, which maybe was one of the reasons you saw a temporary blip, that 5.7% figure that had come in for the GDP. But, you know, it's a continuous process. You saw GST Council meet, which had made a lot of changes, you know, in line for what the SMEs and the exports said. Do you think it's going to continue? And if you had to make 3 suggestions saying this is what's needed with the GST, what would it be?
So one of the things which really came out quite nicely and clearly is that generally most of the taxes are paid by 400,000 actually tax base. So the idea is to really increase the tax base, not necessarily get the large sums because some of these are tail end. And I think that was very well explained, that what we should be looking for is trends in the tax base, and overnight behaviors don't change. Yeah. So I think this is all leading to a lot of changes in the behavior itself. And that I think will be very, very positive as you go along. I understand that there are going to be other changes of checking as to whether people are paying GST or not and things like that as we go along. That will all aid to the compliance.
Okay. Because that fear that where you are first assumed of not paying taxes is what you're perhaps saying that needs to change.
That is true, and also I think there was a clear conscious effort that the higher tax rates from 28 may come down to 18 for many of the products. And while when the implementation was done, it was done across, but as they go along, they're really looking into the details, and some of these may get scaled down. So the idea for all of us, I mean, India should actually brace itself that we are really working towards reducing corruption per se. And that's how, you know, more and more people, if they come under the tax base, it's not the rate that matters, it's about the compliance that really matters. And that will really help in the long run.
My final question to you, there's a very ambitious disinvestment target. The finance minister still maintains that 72,000 crore rupees will be met comfortably. I'm guessing, you know, 30,000 odd from the ONGC HPCL deal. I wanted to get a sense from you on where investors stand when it comes to this kind of paper out from the PSUs.
So I would really say that some of these companies are the 9 Ratnas in many ways, which were identified by India for long time. And each of these would people actually don't invest whether it's a public sector or a private sector. What people really...
But they should, because now the public sector has no choice but to spend money. They have to give those special dividends, unlike the private sector.
No, but you know, if you ask me, public sector have been consistently giving dividends. It gets ignored when actually...
They have no choice when the government asks for it.
But it's good, right? Because dividend means, you know, your investments are yielding returns, frankly, on a day-to-day cash flow perspective. So I don't think investors really look at that this is public sector versus private sector. If the company is good, you will see investments. I don't see, you know, the price may matter and how it's marketed may matter.
But along with this, you've had some very big IPOs, whether it's in SBI Life, ICICI Lombard, a lot of IPOs lined up. So it's all going to compete.
It's already done. We did Lombard, and it got a very good thing, and SBI Life followed, and also that has really done well. So for a good company, good appetite, and larger name stocks, there are more investors because liquidity is more.
But are you seeing more allocation towards India?
I do think actually allocations, I think people keep switching amongst there. India does stand out, but you know, if markets get overheated, you will see some sell-offs like all other markets, but China, India, Korea do look good.